Good morning. Friday, July 10th. Tonight, SK hynix prices the largest foreign IPO ever done in the United States, and for the first time in 3 weeks, global and local flows are pointing the same way. The catch: this tape has faded 3 straight morning rallies. Today is about 2 clocks, 10:30 and 2:30. 4 numbers tell the story. Semis led New York again. The ADR priced at a premium with 7 times coverage. Foreigners bought cash Korea for a second consecutive day, first streak since mid-June. And SKHY at 85 against a 15 VIX confirms this remains a local positioning event, not global risk-off. New York gave us a clean setup. Memory names led on a record revenue print, and the US-Iran exchange was absorbed. Tankers are still moving through Hormuz, so crude actually eased. The one standing offset is the 10-year at 4.55, a 7-week high. This is the largest foreign listing America has ever taken. 7 times covered, priced at a premium to Seoul. The structural point for you: Korea closes before the ADR opens. Whatever Seoul does today, the real verdict prints after our close Friday overnight is unhedged exposure to that print. Why do we still run crisis bands into a bullish setup? Because the volatility infrastructure has not gone anywhere. Realized volume is 4.1. VKOSP is 85, and the leveraged ETF complex can mechanically reproduce 6% swings. Yesterday touched both our bull and bear bands in a single session. Wide bands are not caution, they are the correct price. The flow picture finally cooperates. Futures led, cash followed. Foreigners are buyers in both books for the first time in 3 weeks. Retail is selling the rally, which is normal after a 10% drawdown, and it means morning supply. One housekeeping note: we caught a bad flow number in circulation this morning. 400 billion won of foreign buying, that is actually 135 on KRX finals. Direction is right, size is not. Verify your feeds. Our core structural thesis for global accounts: 12 trillion won of single stock leveraged AUM rebalances at the close, 2 times AUM times the day's move, in whichever direction the tape went. A 5% hynix day, eyes 0.8 trillion of mechanical flow into the bell. Hong Kong already told you the mood. The CSOP2X closed at a 5-point premium to theory. We do not initiate in the last hour. The map itself: base is modal at 33, but the mass leans bull, 30 above versus 29 below across bear and crash. Note, the bands are engineered, not drawn. They tile the whole real line. The bull ceiling clears the biggest up day of the last 2 weeks. The bear floor clears the biggest down day of the last 5 sessions. Tails stay fat because the leveraged complex makes them physically reachable. Execution is 2 clocks. 10:30 tells you whether the 4th morning rally survives. If half the gap is gone with exhaustion signals, we downgrade immediately. 2:30 locks the mechanical close flow. Positioning: long the memory chain, watch Samsung for catch-up, avoid autos, and hold at least half cash. We stay out of the last hour. To close, everything lines up for the first time in 3 weeks, into a historic listing. But discipline over enthusiasm. The tape has punished every morning rally this week. 2 clocks, half cash, and remember, the real print happens while Seoul sleeps. Questions welcome.